Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, specifically for gold. Now, this is what the biggest speculators in the market are doing, so essentially hedge funds and the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong monthly supply and resistance area. From here, all this previous rejection to the downside was created. Again, here, the market tested its zone and rejected it to the downside, confirming that this was and is a quite historical structure level for this market, currently acting as structural resistance. And what we can see is that the market at the moment just tested exactly the same zone and started rejecting it to the downside. In a situation like this, we could expect more bearish price action to be created away from the area. Dropping down on the weekly time frame, what do we have? Well, from a weekly perspective, if we follow the movement of the market, so the pattern of the market, we can see from here a very strong impulse to the upside, and then the market started creating this ascending trend line, ascending channel, which is in between two trend lines, which are these ones here. This is the low of the channel and this is the high of the channel. And when you see a very strong impulse to the upside and then an ascending channel, this essentially shows a deceleration of the market. Why deceleration? Because it shows how while here buyers were clearly in control, only printing green candles, here every time that the market goes a bit higher, there are new sellers entering into this market, which are competing essentially with the buyers. And it seems like when you see a movement like this, the market is losing steam and at some point it will break to the downside. Now, combine this weekly pattern with the fact that we know that on the monthly, we are inside of a very strong monthly resistance area, and it's quite clear to understand how we have good probabilities for a potential rejection to the downside and essentially for the market to start creating a bearish trend away from that monthly resistance that we have previously identified. Now, if we drop down on the daily time frame, what do we have? Well, here on the daily time frame, this is where things get very interesting. Now, first of all, I did speak about gold quite a few times in the past. I spoke about gold when the market was around this area. I explained all the reasons for which we could expect this rejection to the upside. Again, after this impulse and correction from here, I explained the reasons for which we could expect first the creation of a higher high, and then after this correction from here, a higher high and then a rejection to the downside. And by the way, I will link in description all these previous analysis, so you can go and check them out for more free education. However, at the moment, what we must notice is that we have a market which has just broken daily structure to the downside. In fact, if we look closely, we can see that this was the structure level that the market was respecting from a daily perspective. This zone was acting as previous resistance here, again here, which the market broke to the upside with this impulse, and at that point all that previous resistance started acting as support here and again here. However, what we can notice is that with this impulse the market just broke back below this previous resistance, turned support here, which is now once again acting as resistance. And as we are currently below resistance, what we could expect is a potential retest of this previous support and resistance before then potentially getting rejected to the downside. We can also notice that if we look at the patterns of this market, If we have an impulse and we want to measure the correction, we have to take our Fibonacci from the high to the low of the impulse leg. And if we do that, we can see how we have a perfect 0.618 Fibonacci retracement, lining up perfectly with this previous support turned resistance here, creating a confluence of resistance that we could expect this market to potentially test and then to reject to the downside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. If we look here at the net positions, we can see how net positions with the last reports have constantly been increased. We went from 98K all the way up to 195K net positions. So if we look like just here at the broad view of the COT data, it would appear like institutions are still on the long side of this market. However, if we dig deeper, what we can notice is that with the last reports, we were seeing shorts getting closed. Now we start to see once again shorts getting added, with 3,800 shorts getting added. Now keep in mind that these shorts were added while the market was still above the daily support. Now that we are below the daily support, there is good probability that we have seen more institutions adding shorts, creating this move to the downside, which should be reflected with the new report. Now, what we can also notice is that shorts have been increasing for quite a lot of time, going from 63K with the lowest level that we had. Currently, we're sitting at 70.6K shorts. So even though longs are still getting increased, shorts are getting increased at the same time. And keep in mind that after this break of support, there is good probability that with the new report, we will see how longs are actually now getting closed, since we have reached that monthly resistance, instead of which there is a good probability that institutions have taken some profits. And at this point, we could see more bearish continuation, especially if the market will go and retest this confluence of resistance that we have previously identified. This could be a very interesting area, instead of which institutions might be adding more shorts, and from where at that point we could see more bearish continuation. So if the market will retrace to this resistance area, how we could be approaching a potential move lower. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the mentorship program from $497 all the way down to only $97. And as an option, since I have partnered with the forex broker Blueberry Markets, if you join and open an account with them after you join the mentorship program from your student dashboard and essentially move your trading there, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and price goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.